So next up, we are going to have TradeStation's David Russell, VP of Market Intelligence, join us. I know so many of you will also recognize David as he is a frequent speaker here at TradeStation. David, how are you today?
I'm great, Haley. Good to be with all you guys.
Yeah, of course. We're so glad to have you here. You always bring such a great perspective and always so knowledgeable about the markets and TradeStation. So we're very lucky to have you here today, and I'm excited to let you get into it. So I'll hand it off to you.
Terrific. Well, it's great to be with everyone. Let me open up my chat now. We do have a zip file that I want to share. And this is going to be a workspace and some custom studies and the slides of my presentation. And let's just share this now. All right, I'm going to start my screen sharing. All right, you should see my TradeStation, and here's my PowerPoint. All right, so great. So today we're going to look at 3 methods for decoding the markets with TradeStation. Wanted to just first go through my disclosures very quickly. This content is for educational and informational purposes only. Any symbols, financial instruments, or trading strategies discussed are for demonstrational purposes only and are not research or recommendations. TradeStation companies do not provide legal, tax, or investment advice. Past performance, whether actual or indicated by historical tests of strategies, is no guarantee of future performance or success. There's a possibility that you may sustain a loss equal to or greater than your entire investment, regardless of which asset class you trade, equities, options, futures, or cryptocurrencies. Therefore, you should not invest or risk money that you cannot afford to lose. Before trading any asset, please read the relevant risk disclosure statements on our important documents and information page with the link provided there. TradeStation Securities, TradeStation Crypto, and TradeStation Securities Inc. are each wholly owned subsidiaries of TradeStation Group Inc., all operating and providing products and services under the TradeStation brand and trademark. You Can Trade Inc. is also a wholly owned subsidiary of TradeStation Group, operating under its own brands and trademark. When applying for or purchasing accounts, subscriptions, products, and services, it is important to know which company you are dealing with. Please visit this link for further information explaining what this means. Okay, securities and futures trading is offered to self-directed customers by TradeStation Securities Inc., a broker-dealer registered with the Securities and Exchange Commission and Futures Commission, merchant licensed with the Commodity Futures Trading Commission (CFTC). TradeStation Securities is a member of FINRA and the National Futures Association and a number of exchanges. TradeStation Crypto offers to self-directed investors and traders cryptocurrency brokerage services under federal and state money services and money transmitter and similar registrations and licenses. TradeStation Securities, TradeStation Crypto, and TradeStation Technologies are each wholly owned subsidiaries of TradeStation Group, operating products under the TradeStation brand and network. You Can Trade Inc. is also a wholly owned subsidiary of TradeStation Group, operating under its own brand and trademark. TradeStation Crypto offers to self-directed investors and members and traders cryptocurrency brokerage services. It is neither licensed with the SEC nor the CFTC, nor is it a member of NFA. When applying for purchasing accounts, subscriptions, products, and services, it is important that you know which company you'll be dealing with. Okay, well, thank you for waiting with me through this. Now, just to very quickly show you, if you clicked on the link that I shared, you should get a zip file, and the contents of it should look like this pretty much. There is an easy language document with EL logo. There is the workspace, and there is a PDF file, which on my computer shows up as a Chrome document, but on yours it might show up as an Adobe Acrobat or something like that. So the first thing you want to do is you want to double click on the ELD file, make sure you have TradeStation turned on, and it will bring up this dialog box that will then import a series of indicators, which I already have, but you need to make sure those indicators are installed before opening the workspace. And then once those are installed, you can open the workspace and you will see, this is what you will see. Some of these things are custom indicators that are in ELD, which is why you need to start with those first. All right, so first I want to talk about here, we want to decode the markets, and what are really, the thing we're really looking to do is to kind of like figure out the market. What is happening at any point in time? Now, this changes all the time. One of the things I'm always writing about on the Market Insights blog and working within masterclass with customers is trying to assess which parts of the market are working at different times. And throughout this entire period of time through COVID and then after COVID, we were looking at the shift toward, growth stocks, the shift toward energy, all these different changing sort of dynamics that have been in the market, and all this sort of, narrative that I'm able to see happening. I use TradeStation for all of it. So that's what I'm going to show you guys how to do, so you can leverage some of those systems for yourself. And then we're going to just go through 3 different methods using moving averages, new 52-week highs, and industries and sectors to understand. All right, so fundamentally, why markets change is supply and demand. These are the main forces in any market. These change in the stock market based on company fundamentals and macro conditions. It's important to recognize these are 2 completely different things. We even see in some of the situations right now, when we've had certain technology and software companies that have reported good earnings. It doesn't matter. It goes down. People are just selling them. That is a macro situation. So basically, fundamentals are earnings, forecast, products, company like news and deals, M&A, people news, like with, things happening with people like Elon Musk, all those different things. Those are fundamental because they're based on the company itself. And then you have macro things like economic growth, inflation, politics, energy prices. So these things are totally like just different forces. And it's important to kind of recognize that, because very often people might be looking at companies like technology companies and say, well, it's a really good stock. It has all this growth. It has all this potential. But when you're in a situation of interest rates rising, it might not matter. When you're in a situation of the economy accelerating or weakening, a lot of those different things are going to overshadow the fundamentals of any company. So it's important to kind of separate those 2 things and understand company fundamentals and the macro situation. These are essentially the forces that move stocks. So basically, analysts study companies, they study their businesses, and then you have economists and strategists following those macro conditions. I personally read all the economic data. I write about things that matter on Market Insights. I include it in the different articles I do, but you don't have to do that. In many ways, simply by looking at price in the market, that will amalgamate and put all those things together. It will discount all those things that you actually need to know. And then we're going to look at basically moving averages, 52-week highs, and sector performance to do this sort of assessment. So moving averages smooth out prices over time. I think we know this. Stocks above their moving averages are often trending higher. So we can find some stocks based on moving averages using TradeStation scanner tool and find stocks in potential uptrends. So that is now slide 7 I'm on. And we're going to go here to slide 8. I'm actually going to walk you through now using scanner. So now scanner is an interesting tool. Right here in front of us, we have RadarScreen, and I'm going to be returning to this, and we have a chart study. So if you go to window in TradeStation, you can see it has 2 apps open. I'm going to now open a new app, which is called Scanner. And I have a whole bunch of scans that all exist for myself. Hopefully you can see these. It's visible enough. And what I'm going to do is I'm going to create a new scan. And to make it go to the top of the list, I'm just going to do exclamation, exclamation, space 1 first. And by doing that, it's going to force it up to the top of the list. And I'm just going to call this one, above moving averages. Now, this is going to be relatively simple, but I think you guys can start to understand the power of Scanner. There's things you can do on Scanner that are simply not possible with most other data tools that are available. So once I named it, I hit next, and then it's going to ask you what symbols. I'm just going to say all stocks. You can also do things like include things based on, if you go down to TradeStation symbol list, there's indexes you can load, like the Dow Jones Industrial Average or the NASDAQ, whatever. I'm just going to do all stocks, hit next. All right. I have mine set to a default that it includes a bunch of things, but you guys will see it looking essentially like this, just blank. So the first thing I'm going to do, now remember, we're over on, right now we are on slide number 8. You can keep these step by step when I show you how it works. So the thing about Scanner is it has all these things under these little folders, these different criteria. So the first thing I'm going to go to now is capitalization. One of the issues is you'll often find a lot of stocks that are just small, they're illiquid, they're not very well known. I'm going to set greater than 10,000. And that means 10 billion because this is listed in million. That's the first thing I'm going to do. That's going to eliminate a bunch of small random kind of companies. I also want things that trade more volume. Sometimes you'll find some random companies that are like European companies that they trade very few shares a day, but they might be large companies. There's Japanese companies like that too. So you go we're going to open up the volume, and then we're going to go to volume average 10-day greater than, and then I'm going to look for something greater than 500,000, no commas. And then the next thing I'm going to do is I'm simply going to go to price. Now you'll notice there's all kinds of different prices. High, low, close. You can have the highs from different days ago. There's a lot of interesting things you can do with this. Just to keep it simple for now, I'm just going to go to last price, and then I'm going to go to greater than. And now I need to go to an indicator. So if you'll notice, all these things are in little folders here. These are all kind of pre-built things that are readily available to the scanner that will pop up really fast. You can also have it do calculations in the scan by using an indicator. A moving average is a calculation. So the actual name of moving average is called move av one line. And what that basically means is it's just going to plot out one moving average for you. So I'm going to include that now. And then what I want to do though is I want to set the interval. So I'm just looking for stocks above the 50-day moving average. You're going to notice the length here is defaults to 9. I'm going to set it to 50. Now, another thing I'm going to do in this case, just to make sure this works, is I'm going to set additional data to say 60. This will almost certainly work without it, but occasionally it doesn't. So just one little thing to be aware of is sometimes when you run scanner, for some reason, it will not load all the history of data. And if that happens, sometimes you're going to want to adjust the load additional data. So all these are 3 basic things. It's going to find stocks 10 billion in market cap, 500,000 shares a day above the 50-day moving average, and I'm going to hit run. All right, now you can see it running. So while it's running, let's move on to my next slide. All right, so let me just also tell you that we also have moving average. These are simple moving averages on TradeStation. If you want to do exponential moving average, I'm just going to show you this. You go to studies. It's going to be called moving average exponential right here. So I wanted to show you that's if you want to do exponential moving averages. Exponential moving averages change more quickly based upon, let's see, this did not return any, wait a second. Let me try and run this again. I might have some other ones set to run automatically near the close. Sometimes I run too many scans at once, and I think I have a bunch of scheduled ones that might be running. All right, so I'm now moving on to slide number 9, which is looking for stocks that are hitting 52-week highs. Now, stocks that are under accumulation are often going to be making new 52-week highs. And this can distinguish stocks, between stocks that are making short-term bounces and companies that are in bigger uptrends. There's several methods with TradeStation to find these. Now, before we do that, I want to just show a good example that I think is especially interesting was a stock like AbbVie. This is a pharma stock that, now the way this chart is set up, this is designed to show when it's going to be hitting new highs for the period of time on the chart. The chart has a year of data on it. So whenever it's hitting these highs, it's going to be starting to get near new 52-week highs. And here you look at a company like AbbVie, when it hits the new 52-week high and breaks out, you get a period of time with a sustained sort of move. And these are some of the sort of opportunities we can be looking for momentum trading. So there's another tool on TradeStation called Hot List. The Hot List app includes a bunch of pre-built lists of stocks that are hitting or nearing their 52-week highs. These are updated in real time throughout the day, and they're available to you. Now, the way you're going to access those is by going to Apps. Hot List has, where did my Hot List go? Here it is, has a little flame on it. And what you're going to do is you're going to go under the menu for equities, price list, and then there's going to be 2 different values. One based on 52-week high based on dollars, and one based on percent. So if we go to this very quickly now. I'm going to go to equities. And then we go to price lists. Some of these things are based on volume or volatility. In this case, we're going to go to the price list folder, and then we're going to go to approaching 52-week high based in dollars. And here's our list right off the bat. And it's going to show 2 cents from the high and things like that. Now, another thing we can do with this is we can click on the little S here for symbol linking. You'll notice that my chart here has a green S, and this has an S as well. So now by clicking on these, it's going to start to show us companies that are nearing 52-week highs. Now, these are all different sorts of companies, and some of these don't have huge amounts of volume, so they might be somewhat obscure. Now, the thing is that you can look at this column here for total volume. Now, this is one of the other reasons why in Scanner, we wanted to look for things that have more volume. The other one that are near 52-week highs is approaching 52-week high by percent. So both of these two hot lists, they generate a huge amount of information that's going to come your way all the time. And this is just something that's worthwhile to take a look at, you know, every day in the afternoon. Take a quick look at it, and you're going to start to see some kind of big companies. For example, here we have a company like Hess. We have Chevron. You know, these are major companies hitting 52-week highs. And some of these companies are just, I was looking at some of these today, but if you look at a company here like Chevron, it's just breaking out to new 52-week highs. So these are often the sort of things that are going to give you, you know, potential opportunities for companies that are in, you know, relatively established trends with certain macro conditions that favor them right now, which is, you know, apparently the case right now when we look at energy. All right. So those are the hot list. Now let's go back and look at the previous scan. For some reason, this did not return any results, and I am not sure why. There are definitely stocks above the 50-day moving averages. This is interesting. Sometimes I think I've run too many things at once. I'm going to try it one more time, and I'm going to move on to the next thing. You can keep notes on this, and you can run it yourself, and this approach will work. You know, the actual steps I went through on this. Let me actually just check one other thing. One of the nice things about Scanner is that you can set these automated things to run, and I would not be surprised. Let me make sure I don't have any that are set to run right now. I'm going to deactivate this one. So hopefully it does not get in the way. Okay, I apologize for that. I'm going to set something else up now in Scanner. And what this is going to do is, this is going to find stocks that have been basically hitting new highs recently. Now, here's a custom study that we're actually going to include in this. So I'm going to go ahead now and create a new scan. I'm going to call it, I'm going to put a 2, and I'm going to call it recent highs. Now we're on slide number 11, by the way. And the same thing, I'm going to do all stocks, and I'm going to remove these. I'm going to change market capitalization to the same thing I had before, which is going to be 100, it's going to be 10 billion, and then I'm going to set the volume average 10-day greater than 500,000. And now I'm going to use a new tool that I'm sharing in this masterclass. In this webinar now. And this is something that I'm going to be sharing soon with the guys in masterclass. And we're looking for companies that are above their highs 6 months ago. There's a new tool I created called Past Highs. And it's something that it allows you to look back and to find companies in a market like we're in right now, when you can find companies that are above their highs a certain period of time ago. It can also find companies that have broken out and are outperforming. So I'm going to go to moving average one line. And I'm going to set it this time to 10-day. And then I'm going to set it greater than. And then I'm going to set it to this other indicator I have, which I just shared with you, called past high. Okay. And then what I'm going to do is I'm going to use another indicator called days since 52-week high, which is also in the custom list I gave you. And this counts how long since the stock made a 52-week high, days since 52-week high low. And I'm going to set that to being less than 21. Okay. And now I'm just going to hit run on this. I left off one criteria, but let's see now. Let's go back and check this. I'm very confused about why this is not working. I want to apologize for this, but it doesn't make any sense to me. All stocks scanned criteria, volume average 10-day. Anyway, I have occasionally had this happening with Scanner, especially at different times of day when things might be more busy. And I want to apologize for that. But keep the notes on this, and it will basically work. All right, let me just go back to. I want to now explain this indicator that I've created. This one is running in the background. So I've created an indicator here called days since, called past high, and it's showing up down here in this red line, and the 10-day moving average is the yellow line. So if we're looking for stocks now that are basically trending higher, but are, they might not have been exactly at a 52-week high. There might not be other signals for them. And what I've often found is that you might find a company that's above its old high from, say, 6 months ago. Now you can customize this indicator. It defaults to 6 months ago, which is 125 candles, which is how it's set up in the actual indicator. So if you look back at some different companies in the past, I want to show when this would work. We're essentially looking for companies where the yellow line is over the red line. And what's interesting here is if you look at where the market was for a company, like Chevron, when back in in December, a company like this was just kind of lurking above its old highs, and you could see that because the yellow line was close to the red line. This is the kind of signal we're looking for on this. So some interesting patterns I noticed that came up with this is a company like Apple. Even in mid-March, if you look at Apple here, this was basically even when the rest of the market was had a major pullback, Apple was still above its level 6 months before, and it had a really strong rally. So this is a sort of indicator I'm looking for. And basically what this will show you is this is going to show you that a company is still in a longer kind of accumulation. Very often when companies break out to new highs, they pull back. It might be a long time before you actually get the continuation, especially when you're in a bearish market. And so this is an indicator that can help you find that. Some other ones I thought were interesting was a company like Johnson & Johnson. If you notice, a company like this also had the same pattern when you actually started to see this stock was making relative highs, even when the rest of the market was weak. And this is another one that popped up on my list. And another one that worked really well that we had actually written an idea for on TradingView was a company like Dollar Tree back in January. At a time when the rest of the market was very weak, you could see Dollar Tree had broken out above its old highs and was consolidating there. And then it gave some interesting signals coming off of this signal, which we spotted it right around here based on this signal. So I wanted to just mention this because when the market is under pressure like it is now, and very few companies are making 52-week highs, there's other ways to find things that are potentially under accumulation. So let's look at what this has returned now. Now this one has returned us some results. Now if we look at these just based on the biggest companies first, based on market capitalization, what we can basically see, same thing with Scanner. I'm going to click the little button to link it, and then we can also see some of these same patterns. And what we're finding here is we're basically finding the companies that have been outperforming recently, things like energy and pharmaceuticals. So right off the bat, this is kind of what I'm talking about, like by decoding the market. It's just telling you right off the bat, these are companies that have broken out to new highs. And when things break out to new highs, they often don't really have a lot of resistance. When you look at a company now, like, a company like NVIDIA or something, which is reported today and be interesting to see how it's doing. But a company like NVIDIA, people can look at this chart and there are people who could have been buyers different points down. And when this stock, rebounds, there's that risk of people stepping in and wanting to be selling at these different levels. A lot of resistance on a chart like this. But then when you look at a stock right now, like Merck or something, it's broken out to new highs. And under that condition, you basically don't have any natural sort of sellers. And that's the sort of thing the value of looking for stocks at 52-week highs. So this scan also is good because you can basically sort on things in terms of how many days since they made a 52-week high. And you can see, in this case, we have a stock like Pepsi or something. They had that big sell-off and we had the weakness in Walmart a few days ago, but you're still looking at a company that has been making new highs and is, outperforming the rest of the market. Now, I'm going to add one more criteria to this, and this might be a criteria you might want to simply use all by itself. So what I'm going to do is I'm actually just going to, I'm going to deselect these two, and I'm going to add, and now again, we are on slide 11. I'm going to add price, and where is the percent within its 52-week range? So this is actually, if you go to price, and then you go to percent to 52-week range, and you go to, sorry, I need to silence my phone here. I'm going to say greater than 80. And what this is going to do is this is going to take a stock's 52-week range, and it's going to basically, have 100 as the top of the range and 0 is the bottom of the range. So by looking at this is going to find companies here that are near their highs, but are not necessarily at their highs, but are trending, or in more of an uptrend. And it's interesting again that what do we see? We basically see energy companies. So these are all the sort of things that are telling us again, this is the area where the market is under accumulation. This is the place where money is flowing. And this is the kind of thing where right now, when you want to look to decode the market and understand, it makes sense to be leaning in that direction. I apologize for this. I'm going to just completely turn this phone off. So basically, when you and we're going to, one of the next slides we're going to talk about is understanding things based on sector, because very much when there's macro conditions in place, people tend to favor certain sectors over others, and we've seen that really clearly with the weakness in things like technology and the strength in energy. And it's important to keep your eyes focused on those areas of relative strength and the areas where money is flowing. And by running scans and things like this, it's an objective way. You're not relying on some analyst saying he likes some company like Baker Hughes. You're getting it right off the scan, and which is based purely on the price action. And it's just interesting that as you look at the scan, you start to actually find those companies that often have interesting fundamental news. Another thing you can do, and this is not in the PowerPoint, but I wanted to show you a little trick I do sometimes, because you might not recognize the companies that come up. You can go to one more thing here. You can go to indicator, and then you can go to industry. And you can then go to this thing that is basically, it means is not, which is the greater than, less than. And then you just do quote, quote. And by doing that, it will basically tell you what industry everything is, so you can quickly understand and recognize it, because some of these are companies you might not have heard of. Okay, so I just want to make clear that these two, when you're using these two things, the 10-day MA greater than past highs, that is going to find, this requires a custom indicator that I gave you in the zip file, and the day since 52-week high also requires the custom indicator that I gave you. I also want to show you, looking back a little bit, some of the ways that I have found this to be an interesting tool. Now this chart is set to right now 1 year of data. I'm going to change it. I'm going to go to another stock, which has actually recently been really hammered, which is company C. It's this kind of esports video game company. But what's interesting is this was one that I had watched way back when the pandemic was getting started. And so I'm going to change this to date. I'm going to change the data on this. I'm going to edit symbol. I'm going to put in like 4 years of history. Now, if you look back at this stock back when the pandemic was getting started, here we are in March of 2020, the very worst, part, the very low of the overall market. And what's interesting is it basically, this one had the yellow line was over the red line, which meant that that 10-day moving average was above the high 6 months ago. And this stock went on to basically move up dramatically. It went from like 40 to about 300. This is an indicator when you're looking at times of weakness in the market, and that would be in a case of something like now, in its own different sectors that are being favored. But this indicator can tell you that these are companies that have not been sold as aggressively, and it means that money is potentially flowing in that direction. And this is an approach that I have found to be consistently able to find strength, especially in periods of weakness, to be looking for those companies that are above that previous high 6 months ago or another time frame. You can just kind of adjust it based on it. There might be obvious events or obvious things in the market. Okay. All right, so now we're gonna turn to RadarScreen, which is some of these other tools that I have here that I did want to share with you. We're going on now to slide number 12. RadarScreen can track industries and sectors that can help focus our attention on outperforming parts of the market. So right here, I have a RadarScreen, and RadarScreen is basically a very powerful grid that is sortable, and it brings in all kinds of data for you to be able to basically detect movements in price, to be ranking things, to be monitoring prices, to be monitoring things against indicators. It can set all kinds of alerts. And we're not going to get into that today. Maybe Jesus will talk about it some. When you do master class, Jesus is really good at showing some of these things. I use it. One of the things I use it for is for understanding a big top-down view of the market. And I believe it's useful to start off simply with the main sector funds in the market. So what I have here is I have some interesting custom tools, and I wanted to share these with you. One of them is the day since 52-week highs. So basically, and lows. So this is going to show you right off the bat, energy made a new 52-week high 1 day ago. And then communications, which include Netflix and Facebook and those companies, made a new 52-week high all the way back here. You see that white cross? That was all the way back 184 days ago. Now, simply by looking at things like this, what you start to kind of see, you get a very clear view of what the market is doing at one moment in time. Now, I think it's also important to realize that if you had looked at energy stocks, at a certain point in time, they had obviously a major sell-off when when the pandemic hit, right? And it took them a long time. If you look at them, they were basically, in the penalty box for an entire year coming out. And then it took them an entire year to really start moving and start hitting 52-week highs. So they had to basically put all of this in their rear view mirror. This had to go away on the 52-week basis, and they had to start making new highs before the money really flooded in, like we've seen in this calendar year. So I wanted to just emphasize that when you look at things like some of these communication stocks and some of these tech stocks, and the communications, the consumer discretionaries, the e-commerce companies, potentially they could be under a cloud for a while when you have seen the kind of liquidation. And a lot of people have this inclination. They want to be buying the big NASDAQ, the big growth stocks, or the flashy, well-known names. But if you look at historically the way things have worked out technically, that might not really be the area where we're going to see the outperformance. Because once people liquidate large positions in those things, they don't necessarily come back right away. I would also mention that energy in many ways started its real sell-off in about 2014. And basically it went through about 6 to 8 years of complete misery until about a year and a half ago. So it's just important to realize that when these things change, you don't want to necessarily just go back to what used to work when you're in a new environment. And that's why looking at some of these tools that I'm sharing can be so useful. All right, so this will tell us right off the bat is this is going to focus us on where the strength is in the market. Now, when you have a market like we have now, which has basically been down for 7 or 8, I think it's 6 or 7 weeks It's the longest losing streak in the S&P in like 20 years. For the Dow Jones Industrial Average, it's the worst since the 20s or something. So, I mean, you're talking about an unusual period of time right now in the market. So we're not seeing anything that's making really new 52-week highs. So this is, somewhat useful. It just shows you, though, right off the bat, just one of these things. If you keep over time, it will be, this will give signals at other times. This is just a simple indicator. It's just going to show you year-to-date performance. And you can see year-to-date, the utilities are the only other sector that are doing well. Now, by the way, we did publish an idea on TradingView about utilities a little while back, about how it was pulling back. And this is, to me, actually a very interesting technical pattern. Because you basically have an old high from back here right before the pandemic. And then basically this calendar year, in March, we broke out to new highs. And then we've pulled back and held the old resistance. So, utilities are not something that people maybe want to be thinking about, but it is interesting because this is what my radar screen is showing me now, where there are areas of relative strength and things under accumulation. Now let's look at some of these others. This is distance from 52-week high, which is also just kind of, it's going to be something similar to days since 52-week high. It just shows you the percentage distance. But here's the one that's really interesting. This allows you to see all the sectors that are above like the 50-day moving average. So this is the indicator that I shared here. And this is going to be something that you can customize. If you click on it, you go to edit, you can change this to different moving averages. So you could change this to say the 21-day exponential. Just make sure you spell exponential correctly. Hope I did. No, I probably didn't. Nice. What did I do wrong to this? Well, I'm going to just keep it right now. My technology is not working today as well as I would like, and I apologize for that. Anyway, you can adjust it. Let me just see what I did wrong. All right. You know what I want you to do? I want you to email me at drussell@tradestation.com, and I'm going to fix this study. There's something wrong with it. There must be a problem in the code, and I want to apologize because I'm not sure why this is happening. But this will also allow you to go in and to basically see the things that are above and below the moving averages. And I'm going to just right now put it back to this for now. The next thing is this will allow you to look at this one, moving average order. Same thing. This is going to tell you the ETFs where something like the 8-day exponential moving average is above the 21-day exponential moving average. This is a common sort of relationship when you want to look at things that have an intermediate term trend. Again, this will simply show you off the bat that these are in what you consider more of a bullish setup, where the fast moving average is above the slow moving average. And vice versa. And you can just sort on the list and something like that to see what is actually happening. All right, so I want to apologize for that. Now, it's also interesting to look at when you look at things that are doing better. Again, I want to look at something like energy early on in the pandemic. You can see that this was under the 200-day, the green line on my chart. If you look at the exact same time, if you look at the technology sector, you go back to this period of time in mid-2020, you can see that this got back above its 50-day and 200-day moving average about a month and a half after the worst of the sell-off had occurred. Once that was the case, it basically outperformed for the next 1 to 2 years. And I think that's the sort of thing that we want to be kind of aware of. When you see these different patterns of these sectors above the moving averages, it can also represent relatively long periods of time when that's going to be the area of the market that's outperforming. So being on top of these relationships and looking for stuff that is above like the 50-day moving average or the 200-day moving average is also going to be keeping you in focus on the correct things and prevent you from going down different rabbit holes of areas that are not working well. This has often happened after a sector of the market has a collapse. People go back to it and they miss out on other opportunities, and that's really what we want to be kind of trying not to do here. Okay, so now the next thing we can do here is, remember before we were scanning for stocks that were above moving averages, and I'm not sure why that scan didn't work, but here's something I can do. I'm going to go to studies. I'm sorry, data, add symbol list, S&P 500 index. Boom. Now this is going to do is going to bring in the entire S&P 500. I'm going to just change this back to 50. And this is going to allow you right off the bat to see all the members of the S&P 500 that are above and below their the 50-day moving average. You can do the same thing with the 200-day moving average or any other indicator you might want. And then you can just see right off the bat. Now, what I would often do is I would just say, all right, I'm only interested in stuff above, say, the 50-day moving average. So I'm going to just select that. I'm going to just hit page down with shift. I'm going to delete all of those. And now I have a list of companies that are above their moving averages. Now this one here is also populating. It's going to take a second because it's loading a bunch of data, but in a second, this is all going to populate in. And I should also mention that this can also be customized. We can go to this, and this is set to exponential. I can set it to, let's look for stocks with a 50-day moving average is, say, for example, wait a second. We can set it so we want the 50-day above the 200-day. And then we can set it to simple. Now, the thing is, these are all things I learned pretty much from Jesus in things like Masterclass myself. I was a TradeStation customer for years before I joined the company. And honestly, when I first learned about some of the things you can do with this platform, I basically wanted to work here for years before I was able to. This gives you the ability to do kinds of analysis that are just not really possible on a lot of other things. A lot of people now have some background in coding. It's not very difficult to get into some of these indicators and to learn how to make them do the things that you want. The great thing is a lot of the indicators already exist on TradeStation. You can see their raw code. You can then copy that code and add your own modifications to it, which is really interesting. So this is an example right now of companies where the 50-day moving average is above the 200-day moving average, just for example. So if I click on something like, analog devices, you can see this stock is above its 50-day, but it's below the 200-day. So that's the sort of thing that, from my perspective, this would be one that would tell you that this is the longer term trend. There's nothing all that bullish about it. So it also gives you another way to kind of separate the wheat from the chaff. Very often people are looking for companies that simply are going to have 50-day moving average over the 200-day. If it's not interested. And that's another similar way to be looking for companies that are in, under accumulation. Okay, now another thing I've included for you guys is this list of other ETFs that I think you should know about. And these are basically ones that I look at all the time. And this is how I come up with a lot of things that I write about and that I share with clients. And these are basically the main sector funds, of things like XLE, XLK. These are all based on the S&P 500. These kind of go beyond and they're more kind of nuanced and specific. So for example, this is going to include things like the OIH, which is just the oil services companies like Halliburton and Schlumberger. This is going to include things like jets. A lot of people don't realize this, but airlines are industrial stocks. So they go under XLI, but they're also in another ETF dedicated to them, like jets. There's a huge number of companies that are industrials, and they might be kind of all over the map. You have like defense contractors, and you have, companies that do payroll, and then you have like airlines and railroads. So it's a very, mixed sort of sector. And then by using this, it can help you kind of hone in on some of those individual areas in the market. So this includes about 20 to 25 industry ETFs that I think are worth looking at. And it has the same sort of thing. I can look at, for example, who's been making 52-week highs and 52-week lows. And these same things, the energy. And then you can look also at who's above its 50-day moving average. And you can also see very few right now are above their 50-day moving average, which is not a surprise. Now, another thing, if you scroll down a little bit further, is there's a list of countries as well, which for some reason also did not make it to this. I also have a list of countries, and that can be interesting over time because there have been periods, especially recently, we have seen Latin American stocks in Brazil have really come to life. And another area that a lot of people have been watching recently have been the Chinese stocks. The Chinese stocks have really, been under a major selling pattern for the past, year to year and a half. And there's going to be a certain period of time when those things start to turn. And the thing is that when you look at the Federal Reserve, essentially at a point where it's been raising interest rates, the dollar's strong, that is not good for foreign stocks and things like China. But there's a period of time when you have to recognize something like China has been under so much pressure that if some of those negatives start to go away, the coronavirus finally goes away, the Fed stops, gets nearer to the end of the cycle, there is a potential for something like Chinese stocks to be targeted again. There was a period of time when people thought Chinese stocks were the greatest thing ever. Some of these Chinese technology stocks had some really big runs about a year and a half ago. So for me right now, Chinese stocks are in a period of kind of watching and waiting, but also to remember that when conditions turn, they could potentially enter an interesting period. And again, how will we know that? We'll see it because the FXI, for example, will be above the 50-day moving average. Here's the FXI. And you can see that it is 5% below its 50-day moving average. Its 8-day is under its 21-day exponential. So there's nothing right now that is giving us any kind of signals on that yet. But we want to watch that, because if you watch this over time, maybe once a week, just kind of look at this, you're going to start to see things moving up and down the lists. And it's just kind of interesting to be aware of that. I also have the PPH, which is interesting. This is not watched a lot, but if you look at Eli Lilly, Bristol Myers, Pfizer, not Pfizer, but Merck, a lot of these companies, these pharmaceutical companies, these companies underperform the market for many years, the same way energy underperformed the market for many years. This year, they're outperforming. So we're seeing this when we decode the market using these tools. We see that this year, energy stocks, pharmaceutical stocks, utility stocks are the areas that are outperforming. And then we're seeing that the previous leaders are obviously, as we know, very much struggling. So some of the ways you can actually add these, we're going now to slide 13. And what you can actually do is in RadarScreen, you can add the S&P, the NASDAQ, and the Dow Jones Industrial Average. And those are the individual members that you can bring in. Now, let me see if I have any questions. The way you do that is they're going to data, add symbol list, and then they're right here available to you. And I did that over here to illustrate. Let's see if I have any questions. All right. All right, I'm going to share my email address. And I had something was wrong with some of these indicators I shared, and I actually want to apologize for that. I'm not sure why. I created a new ELD file for this, and you know, I have a lot of these indicators in different places. I will tell you that one thing about TradeStation is that sometimes when you create a lot of indicators, you can get them slightly out of order, and I might have done that, and I apologize if I did, but I want to make sure all you guys have access to this stuff. So if you were not able to get this to work, I want you to email me and I will send you this information back. I do want to make sure everyone has that. One other thing you can do is scanner that I want to just show you here. For some, I want to try and run this one last time. You can also set this indicator. You can also set this scanner when you can have moving average one line greater than moving average one line, and then set 1 to 50 and 1 to 200, for example. And that will also give you a similar sort of thing of finding stocks where the 50-day moving average is above the 200-day moving average. The important thing to remember about scanner is it can look at the entire universe of stocks that exist in TradeStation, and it can find those companies that are not necessarily, you know, in an index or something like that, but they might be doing something at a certain point in time. And I think a good example of that, see, this brought back one result. This is clearly an issue with, see, now it brought back one result, and in this stock is above its 50-day moving average. So I just want to mention there's something wrong with my scanner at this hour of day, and I want to just apologize for this. I have occasionally seen this when around the market close. Sometimes scanner will have issues, but anyway, scanner will look at the whole universe of stocks, and it's important to realize that because there are some companies out there, and a good example was Alcoa. There were a lot of people really trading Alcoa. Alcoa is not even in the S&P 500 anymore. There are other companies like this. There was a time, I mean, when Square was an incredibly heavily traded stock, and it's not in any major index. Zoom for a while. At one point, they added it to the NASDAQ 100, but you know, again, you can have companies that are very actively traded and might have very interesting opportunities, and they're not in an index. And so the only way to find them readily is by using scanner. The great thing about RadarScreen is that it works off an existing list, and you can sort information, and it updates in real time. So scanner will grab a whole bunch of information all at once, and then it's frozen at that second in time for you to access. But then RadarScreen will update in real time. The drawback of RadarScreen is you have to give it the list, or you have to import the list from something like this data menu. So anyway, wanted to just make sure you guys understand the difference between those two things. And really the best thing to do is to kind of use them in tandem. Sometimes what I will often do is I'll just look for stocks that are highly active, or a bunch of stocks that are above a moving average. I'll copy them out of scanner, and then I'll drop them into RadarScreen. In fact, I'll just show you right off the bat. I'll end with this. One last thing that I wanted to, that I do is I have something called active underliers. And these are simply, I like looking, you know, we talk a lot about options, obviously. And I have one that simply does a scan. And what it does is it will simply find active underliers. This will simply find all the stocks that trade at least 10,000 option contracts a day. And I can take that list and I can dump it in. And right now, again, also for some reason, I ran into an issue of it not working around the close. But that's the sort of thing that you can think about doing. You can take a scan of all the companies above, like the 200-day moving average, put them into RadarScreen and watch them for potential opportunities. And then if it's not above, then you just get rid of it. And then you just do the scan every week or so. And that will always keep you focused on the areas of strength. So I want to thank everyone for being with me. I will be doing masterclass, you know, every other week. And again, I think the key thing with all this is to realize is that the market knows everything, and you know, analysts don't know everything. CNBC and other news sources don't know everything. And there's a lot of things that you will miss if you do not use a price-based method for analyzing the market and for trying to decode the opportunities that are out there. There are some companies that will perform very well that will never get talked about. They'll never have an analyst note, and they'll be outperforming. And it's not that hard to detect them with some of these powerful tools we have and the tools that people like Jesus guide people through. So I want to thank everyone for being with me. See, one last quick look. Can you set alerts with RadarScreen? Yes, you can. So for example, none of these columns are for alerts, but you can very easily, I'm going to just go to studies, add study, and then you can add last. I can add a study like last, and then I can add it, move down, hit OK. And now I can go double click on it. And then I can set, if this stock goes above 15, and then you set alerts, and then you enable alert. And now if this stock goes above 15, it'll bring up an alert on my screen. You can do things like crossing moving averages. So you can go here and you can go to studies, and then you can go to moving average one line. You can add that to RadarScreen. And then if you go to alert, let's just change this now. Make sure, don't always remember, you got to make sure it's set to the right value. So this is set now. I'm going to set it to 50-day instead of 9-day, for example. And now I can go to enable alert, enable alert once per bar. Now it's going to bring up a whole bunch of alerts for me. And if I actually look at some of the stocks here, like this one, CHRW, this one crossed its 50-day moving average today, which is a red line on my chart. So you can see it crossing right there. So these are some of the alerts you can set, and we've done other webinars on this. Can we add an option contract as a watch list? You can add it on RadarScreen. I don't know about a watch list. And the thing you do is if you're using OptionStation Pro and you right click on an option, you can copy symbol. And then from there, you can paste it in here. And yes, you can then watch it. Okay. Great. Thank you very much, folks. Good to be with everyone. I apologize for some of my technical issues. And the reason is because of the time of day. I do apologize for that, but please email me and I'll make sure you get all these indicators working correctly. Thank you much.